We're excited to have Peter Politis on the show, and he's the principal at Greybrook Realty Partners. And you've been on before, and you know what? We had a lot of phone calls come in after you were here, so we had to have you back. So welcome.
Thank you very much for having me again.
So maybe we can bring our listeners up to speed that maybe didn't listen to that last program. What is Greybrook Realty Partners?
Greybrook Realty is a private equity firm that allows individual investors to partner with some of the largest residential developers in Toronto to joint venture and build different kind of residential structures like townhomes, condos, and master plan communities.
All right, now you make that sound really easy, but I'm sure our listeners are going, okay, like what's involved in that?
One of the cool things that we allow individual investors to do is to, for as little as a $25,000 investment, whether it's done through a cash or an RSP investment, basically pick the project and the piece of land that they want to buy in partnership with our developers, have the developer do all the work, and then split the profits at the end of the day.
So let me walk our listeners through this, because you know, when you talk to developers, they talk to developers as if they're manufacturing a widget. They have a product, and their product is real estate. So what they do is they buy land, they build condos and commercial buildings and retail, and then they sell that product. So here's an opportunity which really didn't exist just a short while ago, where you could partner with a developer, with some of the top developers. We'll get to that in a second, Peter. But some of the top developers in the city on the very beginning of a development, which is the raw land. So, you know, let's talk about, for example, just to give people an example, let's talk about King West. Let's talk about that project and how it transpired, how many years, and what kind of returns investors got.
Sure. So one of the projects that we did was a project called King Westlife. It was in partnership with Plaza Corp Developments, and it was a 4-tower development in King West. Mm-hmm. And that was scheduled to be a 6-year project, though the average length of our projects are about 4 years. And in 6 years, our investors essentially saw a 41% annualized return. So basically every dollar that went in came out as about $2.40 of profit plus your dollar back.
Wow. Okay,
not a bad return.
Not a bad return at all. So our listeners are going to say, all right, really, is that for real? And how did that work? So is it something that once the project is up, it's all sold and then they get a big check at the end? Is that kind of how it works?
Well, if you think of development is not really a cash flowing vehicle. It's as Simon said, it's a manufacturing process that really, at the end of the day, when a buyer or a purchaser comes in and takes possession of that house or that condo and closes on it, that's when our investors and our developers really make our money. So it's really at the end of the project when the capital comes back as well as the profit distributions.
All right. And we all know that the industry is based on profit. So to get a project done in a timely manner, to get it done where you're using the right trades, of course, and cost measures are being taken and decisions, the right decisions, that all helps to, again, benefit everybody's profit.
Yeah, absolutely. And one of the key things is that the people and the partners that we have that go to work for you every day are some of the biggest developers in Toronto. So we have active projects with Tribute Communities, Fernbrook Homes, Citizen, Empire Communities, Plaza Corp, and the Goldman Group.
Okay, big names.
Well, the top in the country.
Yeah.
And what's interesting about this is, here's what I know from experience. Builders don't lose money. Mm-hmm. So if you can partner with the builders on the land, because Canadians, we always say this, are conservative, chicken, and cheap. So the conservative.
Okay, I'm gonna have to say you always say that.
Well, I do, and it's true if you look around, because you know what, it served us well to be conservative and chicken. So if you do your due diligence, say, look, I'm partnering mm-hmm. with the best developers in the country. I'm partnering with them on the raw land. And there are pros and cons to every investment, and we'll talk about some of the downsides. Like, for example, your money's locked in. For sure. There are versions of this investment, just to be devil's advocate here, that are with the wrong developer in the wrong location. So you still have to be careful and look at each individual deal. I know by looking at what Greybrook's done in the last few years, you don't pick bad partners because you want to keep your customers.
Yeah, there's a couple things. We've just closed our 42nd development project. Now we're pushing almost 10,000 residential units. Every one of our projects has been profitable to date.
That's a nice track record right there.
100% performance.
100% performance. And we have a 96% investor repeat rate. Once somebody does this once, there's a high likelihood they'll do it again.
Well, you got your $2.40 out. You got to put it back into something. Mm. And if people are wondering what's the catch, here's what you got to understand. When you buy a regular real estate investment, you're getting the standard returns that the market will give you. You're getting your 5 cap. You're getting 6. If you're really, really lucky, you're getting 7 or 8. Outside of the core. This is not just a pure real estate investment. You're investing in the land, but you're also getting to share in a great little word called profit. Because the developers always make profit. So if you're investing with them on that level, you're investing on this project, you're guaranteed profit. I think really the only downside, if I may, Peter, is sometimes you just don't know how long it'll take. It could be 3-4 years, it could be 5-6 years, but the clock is always ticking, isn't it?
Yeah, sure. That is one of the downsides of time at the end of the day. But the way that I look at it is that when someone invests in real estate, 99% of the people who do it, they do it as a consumer. They're buying something. They're buying a townhouse, a condo, a retail property, industrial property. And then a small percentage also do it as lenders. So they're giving money out to people as a loan. Now, we see it as a manufacturing process. Certain manufacturing things have a higher profit margin, like software sales or car sales have a lower profit margin. Real estate development has a certain profit margin that allows us to make these kinds of returns for our investors, which is basically doubling your money every 4 years.
Now, how do you help out your clients in terms of picking the investments that I guess will benefit them or they feel is going to have the best profit? Or do they just pick them themselves? Do you guide them?
Sure.
How does that work?
So we see about 100 legitimate development projects in a calendar year. And our organization will pick the top 3 to 6 projects that we feel have the best profit margin, best location. And we talk about location for a second. We don't do periphery type of product. I mean, we are developing in the core of downtown Toronto. We're talking about high rise, and in the, obviously in the periphery of the GTA when you're talking about low rise. But for us, we just actually closed a project in partnership with Empire Communities at the northeast corner of Yorkville and Avenue Road.
Congratulations.
Not a bad location.
No, I mean
maybe like A minus.
Yeah, so a 140 Yorkville address isn't so bad.
Not so bad. So, Peter, I have to ask you this because, of course, Simon and I, we get it all the time. And a lot of media, it's not helping in the terms of they're painting a picture that this condo boom, so to speak, it just can't continue. So do you mind me asking what your take is on the condo market? Where is it going in the future?
Sure. So one of the things that we look at when we start examining the health of the real estate market starts at a supply and demand factor. So what we examine when we start is what's the vacancy rate for all condo units in the GTA? Now, the vacancy rate is about 1.1%. A metropolis city at full occupancy should have about a 3 to 5% vacancy rate. So if I start by saying vacancy rates are low, I'm okay with that. But I try to figure out why are they low? Are they artificially low because our rents are decreasing and people are keeping them low? Well, those who have any rental properties in the city know that rental rates have been significantly rising over the last couple of years. So if I see it in increasing rental rates and a low vacancy rate at the end of the day, I don't see a supply and demand issue where we're at. There are 100,000 legal immigrants coming into the city a year. Stats Canada says we need about 35,000 net new residential dwellings, and we've only built 10 or 11,000 homes last year. So the rest has to come from high-rise development. This is the new Toronto. You're seeing the Manhattanization of Toronto, and what people don't know about Toronto is that it acts like an island like Manhattan in the sense that it has a legislative green belt on one side and a lake on the other. So our ability to continue to build outward doesn't exist anymore. We have to build up. This is the new normal for our city. Well,
and we certainly hear that a lot from Brian Tuckey, the president of Build. I mean, he just reminds us all that we're limited in terms of the land around the GTA. And to help facilitate, as you said, that immigration, we have to build upwards. And when you see those cranes, people forget that means they've been sold.
Yeah, 90% of all units that are in construction currently in the entire GTA are already sold.
Peter, we have to wrap soon, but there's a couple of very important questions. So people have been listening in and they go, wow, 20% returns, 40% returns. Okay, I like the sound of it, even if only half of it is true. And, I know that my money's got to be locked in for a little while. But A, what you're saying is that in most cases, this is an RSP eligible investment, correct?
Correct.
Number one. And number two, what is the smallest investment typically, and what is the average investment? And is there a maximum? Let's just answer all 3 questions.
Sure. So our typical minimum investments are $25,000. In order to qualify to invest $25,000, you have to be what's called an accredited investor, which we can talk more about. Now, our range of investors are very broad. I've got a handful of well-known Canadian billionaires. I have professional athletes. I have school teachers, food truck operators. I mean, there's a lot of different type of investors that we do have.
So there's normal people and really wealthy people.
There's normal people that turn into really wealthy people as well.
That's a good way of putting it, yeah. But typical investment would be, I guess, $100,000, $150,000?
Yeah, I mean, it really ranges. The average size could be about $150,000 in a project, but it's 80% of the money comes from 20% of the people.
I have to ask this: what's the highest investment that you've received
from an individual?
Yes,
$20 million, one check from an individual.
Now, please explain for our listeners when you said they have to be an accredited investor. What do you mean by that? Sure.
So we are governed by the Ontario Securities Commission. So essentially, in order to qualify to invest, you have to meet one of any of the following 3 criteria. You have $200,000 of gross individual income, $300,000 of household income, or $1 million in assets. If you don't meet one of those 3 criteria, in order to qualify to invest, you have to invest a minimum of $150,000. And that can be a combination of RSP, TFSA, cash, etc.
And that could be a combination of husband and wife as well, or brother and sister, that kind of thing.
Correct.
Yeah. And if you're not sure, you can connect with Peter and ask a question.
Absolutely.
Figure it out.
And again, that's just to truly protect individuals out there, right? It's to make sure that they're investing and playing in things that they ultimately should be, right? In other words, if they were to lose it, they can handle it.
Correct.
So it's just there to protect consumers out there. I do want to ask you one more thing, though. You had mentioned earlier that it's RRSP eligible?
Correct.
Okay, so this is something now that from going forward, they can pull from their RRSP.
Yeah, so what essentially would happen is that instead of having 100 shares of Microsoft in your RSP, you'd have 100 shares of the Greybrook Yorkville project or the Greybrook Liberty Village project or the Greybrook College and Spadina project.
Sounds good to me. So instead of making maybe 3 to 5%, if you're lucky, sitting in whatever mutual fund,
20 to
to be able to get 20 to
40%,
40%, I'm thinking that sounds like a good move.
And there's one last thing I'd like to point out before we're up, and that is this. We're also seeing this phenomenon where people have an unused contribution limit and they've got a ton of equity in their home. So we've seen people borrow equity out of their home, put it in their RSP, invest it in this. So you're not taking it out of your RSP. You're getting a double dip advantage in that you're making an investment with high returns. It's investing in lands which is as solid as you get. And you're getting a huge tax break because you just made a big contribution into your RSP that year.
Great point.
So there's a lot of different angles that, we can't even begin to discuss. So this is one of those things where you really need to connect with Peter. He'll sit you down, he'll analyze your situation, help you maximize the tax benefits, understand, what's a comfortable range for you. And then, of course, you can review that with your lawyer, you review that with your accountant, get all that advice.
So how can our listeners reach out and get the information?
Very simple. They just go to our website, go to realestatetalkshow.ca or call our help desk at 416-366-9090. Ask for Peter Politis or more information about Greybrook Realty Partners, and we will connect you to Peter directly. And Peter, other than going on your honeymoon, you're going to be here and you're available to meet with people face to face, correct?
Absolutely. It's my pleasure.
Wonderful having you as always, Peter. And we got to have you back again. We got to talk about this very exciting stuff.
It'll be my pleasure.
Yeah, great insight, Peter.
Great. Thank you, guys.